Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. As always, we get together on Friday, and I always look forward to it.
And we like to answer our listener questions, and so we'll kick off the show with that. We have a question from, it looks like the UK, from KR Andrew. He says, in Britain, people are crowding the beaches in several places, throwing out government mandates regarding social distancing and face masks in light of testing recently ramping up. What, apart from a chuckle from Bob, can he comment on the media and the government setting themselves up for confusing correlation with causation?
Oh, yeah, that's a good one. Yeah, people have just had enough. The phrase I've been using for more than a couple of years now has been that government has just become, the action has become too much in your face and in your wallet aggressive government. It's an ancient one. And this shutdown on the virus story is extraordinary. You can go back 400 years and there's never been a deliberate policy move like that. It's amazing, and ordinary folks are not going to suffer it for too long. They can determine the risks and look after themselves as best possible, but the harm that's being done to the global economy is immense. Now, there was the action into January was speculative in the stock market, and it did generate upside exhaustions and sequential sells, which we advised, but that was before the story about the coronavirus became serious. So with that peak in the stock market, it was a natural. And if it would go down, it would take the economy with it, which happened anyway. So we've been keeping track of two pictures here. One is the extraordinary with governments moving in an authoritarian manner. And then the other is, underneath it, the natural turn from a highly speculative market to what could be a post-bubble contraction, made worse by the coronavirus. So it'll be fascinating to watch and see how this all works out.
The second comment and question from our friend K.R. Andrew. Are the people at a tipping point where they're seeing the similarities of the 2008-9 crash when the swine flu supposedly was being floated as the boogeyman before it became the subprime mortgage crisis? Or have they had enough of this collective punishment, staying in their small homes without air conditioning while the rich are in their homes with a big swimming pool? Maybe a stimulus program of building everyone a nice home with a swimming pool could get us out of this economic downturn.
Yeah, no, I think the point's there. People are beginning to have enough of it. And there was, in the past they've been called popular uprisings. And the last completed and successful popular uprising occurred in late 1989 when the Berlin Wall was taken down, and people there, ordinary folk, had had enough of it. And ordinary folk in Germany then did not have weapons. The border guards had the machine guns. And then when push came to shove, the border guards laid down their machine guns, and the popular uprising was effective. So we should look for something equivalent. Well, let's face it, the Obama administration, with all its rules and regulation and intrusion, was building in the U.S. the equivalent legislatively of the Berlin Wall. And there's a popular uprising going on that's attempting, and being, with Trump as its executive, attempting to undo, and is undoing, a lot of that nonsense that Obama had. And the struggle is going to be quite violent, but basically the point is, again, the public have had enough, and I think will become quite effective.
Our second question from Scott. If the stock market persists in rampaging to the moon, will Bob finally admit we are living in an alternative reality? Is it possible we're living through a worldwide episode of The Twilight Zone and Jerome Powell is playing the part of Rod Sterling?
Oh, my gosh. I'm going to ask Scott to write a couple of paragraphs, and I'll put them in an edition if he wants to. It'd be nice. But look it's the huge five of the high-tech stocks that the whole world is buying. The rebound in the New York Stock Exchange composite is nowhere near the highs reached in January. But you have certain elements within the NASDAQ, and then this huge five, Amazon, etc., making sensational action, but perhaps becoming a little overdone. Now, in the Twilight Zone, this is one that can be used in the markets, and I guess it was March 19th or something, we published that this could be the bottom, and noted that previous heavy-duty liquidation problems in the stock market could last for 2 months, and the 2 months would be at the end of March, and then it turned around and rallied. So, but we can call that a sunshine rally, and often sunshine can last into May and June. The old sell in May and go away, and all we've been doing is watching it rally. And then there has been excesses, so quite likely the stock market can sell off. And then that's where Scott's term, the Twilight Zone, can happen after August, and the do, scary things can happen. But Jerome Powell, being the chair of the Fed, he's not Rod Serling. He's not writing or directing things. He's just along for the ride, and I think when the next phase of contraction comes in, he and all central bankers are going to look rather foolish.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444. Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. Bob, Canada has seen one of its credit rating agencies downgrade Canada's nationwide credit rating from AAA to AA+. leaving only Germany as the only AAA nation out there. What kind of implications does that have for Canada and us poor, hard-bitten, hard-worked taxpayers?
Well, it's an honest appraisal. The federal government has been not just reckless but stupid for ideological reasons, is very much against the resource industry, and yet expects to continue to take money out of Alberta and Saskatchewan and give it to Quebec. So there's a lot of unrealistic things going on. So now, shutting down Canada's resource industry because you don't like carbon dioxide has got to be one of the stupidest things ever. But nonetheless, they're doing it. And we are in a favorable bond market. But the chances are that may not last forever. So on the downgrade, that if I were working at the credit rating agency and keeping track of all the numbers, and these guys are pretty solid in their work, and early downgrades in credit ratings are to be noted. And what happens with this is there will be a slightly higher yield required by investors in order to fund in the future. And unless the federal government changes its ways, the financial mess will, its balance sheet has just got to be hopeless. So I think there will be further downgrades in Canada's credit rating until there's a change in government. And sad, but true.
We'll have more with Bob Hoye right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Canada isn't the only place to lose its AAA credit rating. This is happening across the board, it seems, with what they used to call the AAA Angels. Can you give us the story there?
Oh, yeah. Yeah, Angels were the good quality stuff, and then they get downgraded. And sadly, once you're into fairly heavy-duty liquidation problems, a credit crisis, that sort of thing, the prospects for credits disappear pretty quickly. So you can get in a bad market condition that where the action is faster than the rating agencies can move, and they will suddenly come out with a 3-notch downgrade, where in slower conditions there could be the three notches done, say, over a year's time. But then financial markets don't work that way, do they, Jim? When it's time for a crisis, it happens real fast because they have a tendency to surprise, and they always follow a period of euphoria where everybody gets offside. So here again, Angels will become away from AAA ratings down to BBB, and then eventually junk ratings, and then a contraction. Junk bonds will just go no bid, default, all the terrible stuff. So that, I think, is ahead of us.
Bob, we do have a bright note here amongst what's been a lot of economic gloom and doom, and that's U.S. consumer spending has jumped. Yeah,
we got this V, straight down in stock market and then straight up, and something similar with crude oil prices and other industrial commodities such as base metals. But this is from an extremely panicked out and oversold collapse. So it's natural you're going to get a rebound out of it, and it's extraordinary that the NASDAQ has reached new highs, but hey, you can't get around that. It has. But you're not going to get the equivalent V bottom in the economy. There's still many businesses shut down, retail fronts, and there's many people unemployed. There certainly governments are throwing a lot of money at it, but I don't think it's a healthy thing. And we also should keep in mind that the slowdown in business and contraction would have happened anyways because of the speculative peak in January. But it was made worse by the statists destroying economies, and certainly the disease threat will ease over time. But we want to look mainly that we're in a naturally occurring post-bubble contraction. I think it'll keep us in the right and in a careful frame of mind. And I would not look forward, well, we'd look forward to the pandemic getting over, but it will have very little influence on the credit markets.
Bob, thank you so much for chatting with us.
Oh, always good to get together on our Friday get-togethers, and we'll look forward to next week.
And in the meantime, you'll have a great Canada Day.
I've got my old flags out, Jim. I've got a cotton Union Jack that I've had for 45 years. And then I've got two small flags. One is the U.S. Stars and Stripes, and the other is the old Canadian, what they called the Red Ensign, which served Canada for so long. And I still have yet to get one of the flags designed by the Liberal Party. Regrettably, I don't get too inspired by that. So let's call it going into Flag Week, where we will have some flags around here. How about you? You're going to have some flags?
I don't fly anything here, but I do have solar-powered lighthouses on my balcony.
Oh, yeah, but you're probably one of those guys that like these fancy drinks that you put umbrellas on.
The only umbrella is a giant one over the balcony.
Oh, well, okay, but listen, we got something for drinking outdoors, and these fancy drinks like Trader Vic's used to have the drinks with the umbrellas on them, but what we should have is little solar cells on the umbrellas that you put on your drinks.
That run a little tiny refrigerator to keep it cold.
Yeah, but think of all the good you'd be doing with your tiny little solar cells. Oh, liberal heaven.
And it would light up your drink, so you don't lose it in the dark.
Somebody'd write a song about it. You light up my life or something like that.
You light up my drink.
Yes.
Bob, thanks again.
We'll talk to you next week, Jim.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, he will gladly answer them. Just send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.